What is up, people of the world? How is everybody doing? Welcome back. I don't know who here is on. Let me put the. What's up, Twin Gambino? That's Dwayne. He's one of our analysts and coaches at the ARC. We got Chris O'Connell. What's up, Chris? Erica Green. Hungry to learn more. Who else? Who else we got in here? How's everybody's Independence Day weekend? Hey, what's up, Jay? Good to see you, brother. How's everybody's weeks going so far? Everything Irie here for the alpha. Yes, sir. We got some good stuff today, as always. Y'all know I'm not gonna miss. Let's do this. I was really hoping my mic would cooperate, but this update that I'm doing to it is taking forever. So excuse me if I don't sound as crispy as y'all might be used to. But today we're pulling the curtain back, a little bit. But yeah, so the thing that I want to talk about today in this webinar is the certain fundamental quadrants of a portfolio. And in my personal reflection, something that has helped me advance, move forward, make money, grow my net worth. And we're going to talk about that, about how to build a really good portfolio. Now, I want to kind of gauge, does everybody on this live have a portfolio? Are you guys all investing? I know our students, I can see some of them here. They're invested. They've got crypto, stocks, real estate. They've got certain things that are making them income. But who here has a portfolio? Who here has a 401k? Might be buying some stocks. You've got some crypto. You've got real estate. I know Jordan's got some crypto. He's got some meme coins. We joke about it all the time. He created his own meme project, which is actually super cool. They put out these really nice guided meditations on the interwebs. Nobody here has a portfolio? Where's their people at? Let me see who's watching this. How many watchers do we have? Because I can't see it on StreamYard. No crypto yet. Got stocks. Good job, Jay. Good job. Stocks have been killing it. Stocks have been absolutely killing it. I have a guy who wants to move his 401k funds to wallet. How does he do it? We have had some students successfully move parts of their 401k or IRA into their own custody. And I know we've done classes on it before. The name slips my mind, but definitely go through those archives, Dwayne. It is possible. DW says he's got some crypto. Nice. Well, I hope I can inspire some people here today. And, I personally got super tunnel focused on investing, learning everything I could about it in March of 2020. It was a very crazy time in my life at that point. I had gone through this crazy accident. I lost some friends that I had in a car accident. But out of that came a very nice settlement lawsuit, And in March of 2020, I just put my head down. I got a month off of work. I was delivering pizzas at the time. And even with my settlement, I still didn't feel like I deserved the money that I was receiving. So I was like, you know what? I'm going to make this a point that I will only make profit. Like this money that I just received from the settlement, I don't want to go out and spend it like most people do that win the lottery. I said, I have to put this money to work. I have to grow this so that then I can feel like I deserve the profit, right? And so I it was cool because COVID, and I get a month off of work, and I've got friends. They're all partying. They're binge watching their favorite TV shows, doom scrolling social media, and I just went out and I bought like 5 different courses. I was watching a bunch of YouTubers at the time. I would drive. I would drive delivery as well. When I went back to work, and all I would do is just watch anything and everything I could about investing, the best way to do it, because it was all brand new to me. And one of my mentors, who also has a very big YouTube channel, his name is Mark Moss, and he teaches something similar to what I'm going to show you guys today, which is the fundamentals of building a portfolio. He calls it the 4 pillar blueprint. I'm going to call it the 4 quadrant portfolio. Okay. And you'll see how it was so cool because I learned this portfolio that I'm going to teach you all today. And whenever I became an ARC student, it was so badass because these quadrants that I'm going to teach you about, DeFi helps us kind of merge and blend them in certain ways. You'll see that certain quadrants can, certain investments can apply to both quadrants uh, when we get into it. But again, I just wanted to really learn anything and everything I could about investing. And it was funny because at the time, a lot of the things I was learning about, like risk and not taking too much risk, and not investing in things that seemed too good to be true, I was doing all of that, right? And that's because sometimes, as an educator, I try to teach people the correct way of doing things. But at the end of the day, it doesn't matter how many mentors, how much money you pay. The most valuable lessons are going to be the ones that you learn yourself, right? So I'm not going to get into the entire story. Maybe we can get into it next week if you guys are interested in hearing more about my journey of how I took 200,000, turned it into over $1 million, and then gave 80% of it back to the market. And again, I'm grateful that all of that happened because now I have certain things that will live with me forever. And when I teach people, I can say, I've walked through the fire, I've done this. This is not good, or this is good, right? Like I have lived 20 years inside of two because of how crazy this market has been. Yeah, the most costly lessons. I call it tuition, right? I didn't go to college. I just graduated high school. I never really believed in college for myself, but my form of college was losing hundreds of thousands of dollars to learn very valuable lessons. And I hope I can really pass some of that down to you all today. All right, now, how are we going to do this? Because this is a wide monitor. And I know when I was watching the recording last week, it seems a little slim. So let's do this. Let's just share it on this screen right here. Man, it's hot in this office. It's heating up. All right, cool. We got 23 people on. Hopefully that can pile up. Can you guys just do me a favor real quick and smash that like button so maybe this gets out to more people's algorithm? I'm not famous yet, but working on it. Let's do this. Let's do this. I got a lot of slides for you guys. I really worked hard on this. So let's hope that we all can learn and earn and get smarter and better. Okay. Let's go. So I'm going to share this screen right here. All right. Tell me, can you guys see my screen? Can everybody here see my screen? Yes, sir, says D. Jordan. All right. Hold on. Whoa. All right, cool. So this is going to be about building a smart portfolio. Okay, and the first question you want to ask yourself is, what type of investor are you? And this all goes into identifying your goals, where you're at in life, and where you're trying to go. Okay, some people, they have a large net worth, they have high paying jobs, and they might have a lot of savings, and they might be also close to retirement. Other people might be on the opposite end of that curve, right? Now, the idea is identifying like where are you in life right now, right? If I look at myself, I'm a young guy, mid 20s, who has a long way to retirement. I'm not in need of passive income, right? I don't care as much about passive income as I do, for example, growth. And we're going to find the difference today of those two things, right? But if I was maybe closer to retirement, 5 years out, 3 years out, heck, might already be in retirement, right? Somebody with my profile, with the, I'm retired profile, might not lean as much on growing their net worth, but they might lean on income, generating more income for themselves, right? Because while you're retired, and then there's a little blend of either in between, and it's a spectrum, right? It just all depends on your goals, right? Are you risk tolerant? That's another good question to ask yourself, right? Everybody wants to become a millionaire investing in crypto, but not a lot of people know, or the stock market, or any other type of high growth vehicle. But a lot of people don't really understand and accept the trade offs that they will have to endure to get to that point, right? If you want to make $1 million, you have to be okay with losing thousands, hundreds of thousands to make a million, right? If you want to make tens of millions, you probably have to be okay with losing a million or two, right? Because it's nothing goes up in a straight line, right? And my risk tolerance, it needs to be set up in a way that my investments match my risk tolerance. I'm super risk tolerant, right? I can watch my net worth double in a day, and I can watch it fall in half the next. Uh, and I'm doing it in a way where, I'm diversified. You'll see I have different things in my portfolio. I've had stocks that have done very well for me. I've had crypto. I've had gold. And my investor DNA wants balance, right? I want balance. I'm scales, you know. I'm not betting it all on the farm, but we'll get into it. So the first quadrant that we're going to get into is, well, first, why do you need these four different quadrants? Okay, well, one quadrant is going to help you grow your wealth. Okay, this is what's going to allow you to, maybe you're only worth $100,000 today. Maybe you want to be worth $5 million one day, right? The growth quadrant is going to be the thing that gets you there, right? This is how we grow our wealth. Another quadrant is to generate passive income, okay? And these are separate quadrants. You'll see how they can kind of merge with DeFi. But another quadrant of an investment portfolio is passive income. And if you go all the way back to the good old days, right? Money managers and Edward Jones and the Morgan Stanleys, like the TradFi guys, they used to always preach what they called a 60-40 portfolio. 60% equities, 40% fixed income, right? And this used to consist of basically 60% is going to be invested in the broad stock market for growth, right? Because the US is going to keep innovating and keep growing and keep being valued at higher and higher multiples. And the other side, 40% was going to be invested in treasuries and bonds, and something that doesn't really grow a lot in value, but pays you passive income, right? And that 40%, if you look at 20 years ago, could have earned close to 10% per year, and it would have actually been decent passive income. Today, not as much, right? Now, another quadrant of your portfolio is there so you could sleep peacefully, okay? You've probably heard the saying, don't invest more than you can afford to lose, but obviously a lot of people invest more than they can afford to lose, right? And they end up getting too risky with it, and it causes them a lot of stress. I've been through many sleepless nights because the market was crashing, because my portfolio is plummeting. I'm getting liquidated. I'm seeing red everywhere, right? Just 2 weeks ago, I had $100,000 more dollars. Now I don't. Everything's for nothing. I've been through it. I've been through the mental torture of the ups and downs in crypto. And now I have a piece that allows me to sleep at night. I'm like, okay, I at least have the next 6 months of my life covered, right? I'm not stressed out as much about the day to day anymore. And you want a part of your portfolio. This is a very underestimated part. You want a part of your portfolio that's ready for the unexpected. And this is going to be your apocalypse fund. Okay? And you'll see what that is when we get there. Okay, but first let's start out with the growth quadrant. Okay, the growth quadrant is where we invest in the future. This is investing in disruptive innovation. Okay, disruptive innovation. We're going to talk about that, what that means in the next slide. Technology that changes the world. Okay, and this is a screenshot I actually looked at just recently. I have a Roth IRA on Webull, and I started it, you could see here, in March of 2021, as soon as I began my investing journey. And I've been maxing it out every year. I think every person in the U.S. can invest up to $6,000 or $7,000 a year in what's called a Roth, and this allows you to invest your money in a way that by the time that you retire, all of this growth, this $37,000 that I've made so far, will be tax-free by the time that I retire. Okay. And I was like, man, I'm doing pretty freaking good. Like I didn't know I had this big of growth. I never really looked at my P&L section. I would just get on my Roth, I'd buy and sell stocks, I'd see what the balance is. But when I really zoomed out, I'm like, hey, like this has been really keeping up with what's going on in the market, right? Because I'm looking at a certain part of my portfolio and it's invested in altcoins that might not be doing so hot, or they're still down from where I bought it. Certain stocks I have, they're still a little down. But at the same time, I'm like, hey, I patted myself on the back because I've allowed myself to stay diversified. Okay. And my investing style is I invest in the disruptive innovation, right? So, like in March of 2021, I was a huge bull on Tesla. Okay. And this is essentially disruption in action. Okay. The growth quadrant, this is your disruptive innovation. This is where you invest in things that are disrupting the future and all the systems that we know today. Okay. Like Ford. You're like, what? Ford? Yeah, Ford. Ford, at one point in time, way, way back, almost 100 years ago, right? They were disrupting what was known as the horse and buggy. Okay. Ford was creating cars. Chevron, was it Chevron or Chrysler, GM, right? All these legacy auto manufacturers, they were in the industrial boom of the US, okay? Production, the assembly line, right? We learned about that in school. And Ford, at one point in time, was the disruptive innovator that was releasing a new technology, which was called a car. And today, everybody has one, right? You can see that journey. That journey started over 100 years ago, or about 100 years ago, right? And it was crazy because if you look at the patterns, if you look at that time, there was over 50 car manufacturers. Today, there's only a handful. right? We got Ford, Honda, Volkswagen, whatever else you can think of, Toyota, and really it's condensed to a very small majority, right? And then you have these bigger corporations that own multiple car companies. But at the time, there was all sorts of competitors and all sorts of options, and this guy's doing it like this guy's doing it like that. This is the way this car works, and there were a lot of options. But as time evolved, as the space matured, now we are left with the ones who are left standing, right? The ones who can actually deliver on their promise. We had Amazon, who transformed shopping, right? Now people aren't walking all the way to the end of town to buy whatever it is they need. You know, man, I can buy toilet paper on Amazon. I can buy water on Amazon. I can buy a house on Amazon. You could buy these little modular homes. Like Amazon delivers anything and everything, right? But they transformed what we know today as shopping. Okay, now it's no surprise that 80% of shopping is done online. 90% of shopping is done online because it's convenient. We had Apple, who redefined communication, right? Who redefined communication. At one point in time, people were writing letters and waiting months for that letter to travel across the ocean to be delivered to their loved one. And then for their loved one to write back, and it take months to get back to the other side of the world, right? And then we had email and all that stuff. But Apple came in and they really redefined the way that humans connect, right? Now I have a phone. I can call anybody and everybody in the world. Well, I don't know about everybody. I don't have their number. But I can call a bunch of people from all around the world. We have Google, who redefined information, right? Google was disrupting encyclopedias and libraries and the common places that people would go to acquire knowledge. Now we Google things. I have a question, I go to Google, right? And now even Google is being replaced with something called ChatGPT, right? I don't remember. Well, I kind of use Google sometimes still. It's let's call it an old habit, but I'm more and more just going to ChatGPT to ask all my Google related questions. But now Google is even integrating AI into their web searches, right? But at the time that Google came out, they were completely a leader in this web of knowledge that you could access, right? We had Bitcoin, and there's all sorts of other companies, Uber disrupting taxis. We had Tesla disrupting the gas powered vehicles, right? And all sorts of companies that come in with a better product, with a better solution, and disrupt the normal ways of doing things, right? We had Bitcoin, who challenged fiat, right? Now, yeah, Jordan just put in the chat Netflix, right? Netflix disrupts streaming or disrupted streaming. Netflix disrupted like Redbox and buying DVDs, and now you could just rent them, right? Through a subscription. And we had Bitcoin, right? Bitcoin challenged fiat. Now, it's not superior to fiat in the sense that it's faster than fiat, right? Because anybody that's used Bitcoin, it's a very slow network. But it challenged it in the value aspect, right? Fiat, 2008, government prints billions and billions of dollars to bail their buddies out. They left all of you holding the bag, right? It was the main street people that lost jobs. It was the main street people who had their 401ks destroyed and had their homes taken away. But at the end of the day, the government bailed out the banks and the institutions and the corporates, right? So after that, that birthed the idea of Bitcoin, an uncorruptible money, a money that you can't change, a money that you can't tamper with, a money that you can't take my Bitcoin from me unless I literally give you 24 unique words that you have to put in order, and then you might get lucky and get my Bitcoin, right? But those words are going to live inside my head or somewhere safe. And it's a truly decentralized network, right? Like Bitcoin is challenging the store of value of fiat. And you can see how successful it's been. Now we're moving into this phase where we have institutions adopting it, right? We have corporates buying it and dumping their fiat and holding Bitcoin instead because they believe that Bitcoin has longer term potential than the dollars that are in their bank account, right? Everybody wants to be rich. Everybody wants to have a lot of money, cash, whatever, but investors think in a different way. They want assets, right? I want assets. I don't care about how much money I have. I care about how much assets I have. Okay. Ethereum came after Bitcoin and it unlocked decentralized technology, right? Bitcoin was the first, but Ethereum started to build it on the application layer. So now you can actually do smart contracts and build apps like you could on the Apple Store, but it's fully decentralized. Okay? So here's the disruption of industry. Okay, this is when mass manufacturing came about, when the auto manufacturing boom happened, and I couldn't really find any charts of like Ford in the 50s or GM in the 50s. It was funny actually. GM went bankrupt in 2008, so their chart it's very recent. But I couldn't find anything except for the Dow Jones. So this is like a big index of all of these companies. But you can see from 1945 to 1966, about 20 years, right? The Dow Jones returned 500%, right? So anybody that was saving their money in the Dow Jones, it was growing at a very good rate at that point because manufacturing is um, what was erupting, right? Globalism, expansion, everything. Then we had the disruption of communication. This is Apple, right? You could see what it did from the year 2000 to today. All right, it went up by 25,000%. Okay, if I make 100%, I've doubled my money. If I make 1,000%, I have multiplied my money by 10 times. So I have 1,000 from my 100. If I do 10,000%, I have now $10,000 from my 100, right? So for every $100 that was invested in 2000, turned to 25,000 in Apple because you decided to put your money into the disruption of communication, into the adoption of the cell phone, right? And you could see that when you zoom out, it looks so easy, right? Man, I wish I bought Apple back then, right? Or man, I wish I got into this Dow Jones in 1945, you know? But it's not that easy because you see all this sideways and down that you have to hold through and suffer through, right? You can see even Apple is currently still in a pretty big pullback, right? But it's still growing. But it's not where I personally take my opportunities, okay? Here's the disruption of gas vehicles from 2015 to today. This is Tesla stock, okay? Until today. Now, Tesla's kind of been sideways from the peak that it made in 2021. But regardless, this is still the future of electric vehicles and everything in between. You can see that that's grown by 1,500%. Okay, I started buying Tesla around down here in 2020, and I did really well for myself. It was one of the best performing assets in the 2021 bull market. Okay, Tesla. And I did really well with it because I was investing in companies that I really wanted, that I believed in their future, right? I didn't care about buying Coca-Cola or Nike or, things that were already big and popular. I care about investing in things that are, 10 years out because that's how you make money in investing. You look at the future and you say, well, I know quantum computing is going to be a big thing. I know AI is going to be a big thing. I know crypto is going to be a big thing. I know blockchain is going to be a big thing, right? So how can I get positioned for that today? Am I going to watch these next 10 years go past me? While I know all of these things, I know what the future is. It's AI. I know the future is crypto. I know the future is DeFi. But how am I going to get a piece of that future today? That's what investing allows us to do. That's the cheat code that's been set up in finance. Hey, I can buy shares of companies that are building the future. I can buy a piece of this thing that everybody's going to do or use in the future. So let me get ahead of the majority and buy it today. That's how growth works, right? You can see Bitcoin here. I mean, it goes without saying how well it's done, right? Here's the disruption of centralization. This is Ethereum, right? It's gone up 20 times in the last 5 years, and I think it's going to go up another 20 times in the next 10 years, okay? But it can be a very painful thing to hold through, right? Like, you had to give up a large portion of your net worth in this period where the asset goes down in value, okay? If you want to be super long term and you don't care about price, like my mom, right? Like my mom invests and she doesn't care whether the market's going up or down. She just has a certain amount that she puts in the market every single month. She buys her Tesla stock, she buys her Bitcoin, she buys her whatever else I might tell her to buy, and she's cool. You know, retirement for her is still 15 years out, right? So she's like, I'm chilling. I've got an IRA, I've got my own stocks, I've got a house, I'm chilling, right? She doesn't get panicked. She doesn't go in and, sometimes she'll go in and trade some cryptos. And she doesn't really do that good at them, okay? But she does it for fun. But yeah, this is growth, right? Like I buy something today because I expect it to go up 20 times in the future. I want to grow my bag. I want to grow my net worth so that I can then use that growth to generate income for myself, right? You see how my strategy works. My strategy currently is, if you look at my passive income, I'm going to say, well, I'm not really making a bunch because I personally don't care as much about passive income. Okay. Now I'm going to be incorporating some new plays I found and further evolving my diversification, because now I'm looking at my situation. You know what? Like, yeah, maybe I should incorporate some form of passive income strategies to give myself this balance, right? But I've been pretty much all in on growth. But this is build assets that pay you, right? I might not have enough today to buy a house, so let me go and grow my money so that at one point it grows big enough for me to be able to get a down payment or just buy the thing outright, right? And then that house is going to be my income generator. All right, this is the other quadrant of your portfolio. You have growth and then you have income. Okay, these are assets that pay you. And this was something that one of our business partners, his name is Calvin, he did a class on this a long time ago. I want to say like 3 months ago. Okay, 3 months ago, 2 months ago, something in that range. And he's a multi-million-dollar earner. He's very wealthy. He's got very good financial education. He's come from nothing, and he did this class on the FIN number, which is your financial independence number. Okay, and this is a simple equation. If you want to calculate how much income you need to live, well, take that number. So like, for example, my number is 200,000, right? I want to make $200,000 a year. I only need, a quarter of that, but I have desires and things I want to do and travel and so my number is 200,000. That's my ultimate financial independence number, right? I want to make $200,000 a year without lifting a finger. So you take that, you divide it by 4%, and then that gives you the number that you need in your investment portfolio, right? So like, for example, if you want to earn $60,000 a year without working, you need $1.5 million generating a 4% return. Okay. Now real estate does about 6 to 10% per year in income after you've paid down your mortgage and everything like that, right? So that's why a lot of people go the real estate route, because that gives you passive income, and the real estate property itself should also grow in value and keep up with inflation. Okay? But this FIN number will turn your vague dream of passive income into a concrete target and give purpose to your growth and income allocations, right? Like I said, my goal right now is not income. That's my long-term goal. My goal right now is to grow my stack, is to take everything I have and turn it into 2 times as much, 3 times as much. That's my goal right now. So that's why somebody with my profile is going to have way more in the growth assets, right? As opposed to the income assets. But I'll show you some examples that we're going to be learning about inside of our community, and that I'm going to be teaching about this Saturday. Okay. So, and that's going to come in the later slides. But this is income in practice. These are some examples of income generating assets. You have real estate, which goes without saying. You have liquidity pools, which we're going to learn about some liquidity pools this Saturday inside of our community. You have staking crypto. This is where you can combine growth and income, right? There's certain plays that I have set up. There's certain AI investments that I've made that are paying me 80% per year, 100% per year, 40% per year, right? Because it's just an early stage opportunity, okay? And I'm not going to get into details of that because I don't want to lose you guys. But I have broken it down inside of the ARC. So some people here might have already gotten involved with that. I lend my money on the blockchain, right, to other people that then pay me an interest. Like I also invest in bonds, right? The bonds on the blockchain. And then I provide liquidity with it so that I can make even more every time people buy and sell those bonds. And another part of this is businesses that pay you, right? So I've met a lot of people through life that have a stake in a restaurant, right? They have a stake in a nail salon or some sort of business, right? They're not exactly managing it, but they invested in it so that they can then receive passive income, right? That's a card you play at a later stage of your journey, right? Like once I've made $1 million, I'm going to be looking at, okay, where can I park this money so that it's relatively stable for me and it can be invested in a business that can pay me dividends, right? Because when you make a lot of money, that's where the next phase is to, oh, okay, how do I keep this money, right? Because if you have it in growth investments, well, up here you might have $1 million, but down here you might only have $100,000 left, right? So there's a strategy, there's a tacticality to this, okay? So first thing is like real estate, right? And here's an example of some tokenized real estate that people can buy on the blockchain, right? With just $50, you could invest in this Chicago duplex that has an expected yield of 10%. So I invest, $1,000 in it today, which is not a whole lot. I'll still make $100 passively every year, right? And you can see how that number becomes more and more juicy the more that you have invested, right? So if I made $1 million and I invested into a variety of these properties and they pay me 10% per year, well, now I'm making $100,000 passively every year just by being invested in real estate. Okay, so real estate is the most common, popular, well-known income vehicle. Now let's talk about some less known and less popular income vehicles, like for example, lending cash on the blockchain. Okay, so here's like a protocol that does all sorts of different lending that you could do on the blockchain. Okay, so here's corporate credit. Okay, this is where you lend your USDC, which is tied to the dollar. You lend it, and then they go out and they write these loans to corporations and businesses that need credit lines. But instead of taking that credit line from the bank, they're going to take it from you, or a pool that you're invested in with other people that then could pay you anywhere between 5 to 10% per year, right? You can see this is actually you lending your ETH, right? If you lend your ETH, they'll pay you 5% on that ETH. So my ETH can grow in value. It's done really well. Plus, I'm earning more of it. I'm getting paid more ETH, right? Here's real world assets. Secured lending to off-chain originators and corporates paying 15%, right? Secured by US Treasury tax receivables, okay? 16% per year just by lending my cash to, in this instance, a decentralized protocol, right? Here's another way you can lend your assets, right? This is about lending your cash. This is about lending your assets. So once you've done the work and you've started investing, okay, now you should be looking at, okay, I have some Bitcoin, I have some XRP, I have some Ethereum. How can I start earning income for holding my assets? So here's like a yield where you can earn 4 to 6% on your Bitcoin. Okay, this is an audited protocol. It's not completely risk-free, right? But there are options out there that will pay you some yield on top of your asset, right? Here's Coinbase XRP, and you could go to this borrowing and lending protocol. You can lend it out. So your XRP is still worth what XRP is worth, but because you're lending it out, now you're earning an extra 3% of XRP every year, right? So if I have 100,000 XRP, and here next year I'm going to have 103,000 without lifting a finger. I'm just letting my money work for me, and plus XRP gets to appreciate as that interest gets paid to me. So it's compound on top of compound. Okay. Another thing, and this is what we're going to talk about this Saturday inside of our community, is providing liquidity. Okay. So here you can see a pool that I just recently found where you can provide Solana and USDC, and you can earn a 38% APR per year. Okay. So basically how this works is I have $500 of, or let's say I have $5,000 of Solana and I have $5,000 of USDC. I can put them together, put them inside of a liquidity pool that allows other people to buy and sell the Solana with USDC, the same way that you log on to Robinhood and you buy stocks with your US dollars, or you sell your stocks for US dollars, right? It's an exchange. This is just a decentralized exchange. So I take my crypto and I make crypto babies with it, right? As our one of the teammates, Renee, he made a really funny video about how all of this is like making crypto babies. But I invest $10,000 today without even Solana growing. Say it stayed completely flat. By next year, I would have $13,000, right? So I would have made $3,700 if this APR remains consistent. Okay, and this has been as high as 80%, right? A week ago when I found it, it was at 80%. Now it's at 37%, right? These things fluctuate. Here's another play we're going to just briefly touch on this Saturday, and that is providing your liquidity on an exchange where people leverage trade, right? But now because we're inside of DeFi, we can provide liquidity and we can play the house, right? So the same way that, like, for example, Binance allows people to leverage trade and then they keep all of the fees that you pay every time you borrow their money. There are protocols out there that allow us to do the same thing, except we get to keep the majority of the money. And every time traders lose and they get wiped out or liquidated, that's a profit for us, right? So this is the true meaning of decentralization. This is where I can be the house if I want, or I can be the player if I want, right? But you can see all sorts of yields that this is paying out, right? And it's amongst all sorts of different coins. And don't look at this as an investment in anime or XRP or Fartcoin or GMX or Pengu, right? This is simply an income play. You have $10,000 today. A year from now, if everything remains the same, you'll have $14,000 in fees that other traders would have paid you, or $4,000 in fees the traders would have paid you. You are the player all the time. Yes, you are. Here's another play we're going to look at, which is the same type of a play, except this is like one token that provides liquidity. And you can see there's like $1.5 billion here. But this token will pay you 15% per year. You're doing the same thing. You are providing liquidity so that other people can leverage trade amongst it. And if you look at it statistically, most traders lose money, right? Because they're not educated, they risk too much, their psychology gets in the way. And at the end of the day, that's why trading exists, is because the majority of people lose. And if you know that the majority of people lose, now you have an option to play in a way that allows you to be the house, right? So that's really important. So this is like a sneak peek of some of the stuff that we're going to be covering on Saturday school this week, okay? In 2 days. We have a class dedicated to like alpha or learning a little more. Workshops, let's call it that. And then here's another quadrant. This is the third quadrant, okay? This is cash, your power position, okay? This is one that I've been guilty of not having enough of, okay? Because sometimes when the market is down, I'm like, oh, darn snaps. I wish I had more cash to buy this dip, right? But it's something that I've gotten a lot better with. And now I have a bigger utility because the way that we do things in DeFi allows me to still earn a very nice yield on my cash, right? It allows me to still earn a very nice yield on my cash. But most investors sleep on cash, metaphorically and literally, okay? A lot of people stuff cash in their mattress that is losing value every single year, and they're going to die on $1 million that's not even worth $1 million anymore because of all the inflation that's happened. And a lot of other investors, they simply just don't have cash in their portfolio for whatever reason, okay? And usually that's because we are very stimulus oriented and we want to be invested and we have a fear of missing out. But for tactical players, it's good to have a portion of your portfolio in cash. And it doesn't mean it has to sit there and collect dust. It can actually be working for you in the background so that when those opportunities come about, which the longer that I've been in this game, the more I understand that opportunities are abundant. There is always an opportunity every month, every week, but the best opportunities come with a bit of patience. Okay, and here's a quote by Charlie Munger that said, the big money is not in the buying and the selling, but it's in the waiting, right? Because when that next big crash comes, I know a lot of you will feel like I should have had more cash. Or when the market was up, I wish I took more profit, right? And it's good if you have that cash, because if that 2020 type of event comes and everything melts and the whole world comes crashing down, right? That's when you take that cash position and you deploy it and you buy the dip. And it can also act as your emergency fund in case something happens to you, you're out of work, whatever. Cash equals peace of mind plus buying power, right? It's a very important position. Ways that we can deploy our cash effectively, okay? We could do it inside of high yield savings protocols, right? And I'll show you an example of a few of those. We can lend it in DeFi, and I've already shown you an example. We'll look at another one. But I can go and have my cash position, but it's still earning me interest in the background, right? Of anywhere between 5 on the lower end, 5%, all the way up to like 25%, depending on what kind of plays I get set up with. And I personally like to diversify myself amongst different kinds of plays because you never know what you don't know, and anything can happen, right? So you don't want to go all in on that one thing because it's paying you the most. You actually want to diversify yourself and spread your chips around, right? That whole concept of spreading my chips around is what's kept me in the game so long. And I see the growth. I see, okay, it's working. My DCA is working. My crypto is growing. My stocks are growing. Something you'll learn about in the next quadrant is growing and a lot. Um, but yeah, and then we can also create liquidity pools for different kinds of stable coins. That pays us a yield. And again, we have an emergency fund that earns versus sits idle, right? So cash is not dead capital, it's strategic, right? Think about a little briefcase where you have your cash for a rainy day, but at least that cash inside of the briefcase can be out there making more, right? Even if it's not a lot, 7%, 10%, as long as you're beating inflation, it's okay. But the majority of people, and I get it, it's a scary world, DeFi and all of these higher yield investments. But a lot of people simply have stacks of cash in a safe, or they have all of their savings inside of a bank that pays them 2, maybe 4%, but 4% if you lock up your money for a year in what's called a 12-month CD, right? So they'll give you the extra yield, but they're going to lock it up. They're going to say you got to lock this up, right? So I'm not a big fan of that. I like to have more control over my money. And here's some examples of how you can put your cash to work. So this is a play that we broke down in the community a few months ago. Okay, this is where you're providing liquidity with dollars and digital bonds. Okay, and because of all the people that buy and sell amongst these bonds, you're earning fees every time they do that. And then also you have the underlying bond paying you some 4% interest every year, right? The bond itself is not making a lot, but you could take that bond, which is tokenized, and you could put it in a liquidity pool so that other traders inside of crypto can buy and sell that bond, and you make really good returns off of it. Here you could see, off of my $2,500 investment, I'm making currently about $40 a month. And my yearly annual percentage rate or annual percentage yield, this is with compounding, is 22%, right? So my money is growing, it's making me passive income, and it's not sitting idle. But now I have positions that are set up so that I can go and, hey, if I need this $2,500 because my dog broke his leg, he was chasing the frisbee and he fell over into a creek of twigs and rocks. I have something, right? This is where I can go and pull some funds from, right? And here's another play I set up. This is on the lower end, a 6% yield, but I had about $2,500 in here to begin with. Now I have about 2518, and yeah, so it looks like I've made about $28 as a whole on this play. Okay, and this is a bond that I do have to lock up. You could see until the 30th of July. I can't come in and unstake it or claim it, but in the meantime, I have in 20 days that you could say I have $2,500 that's gonna unlock that I can then go and put into something else like this pool or some of these other ones that we looked at here, and I just like spreading myself around all these different income generating places. Okay, and then finally you have your apocalypse fund. Okay, and this is the one that a lot of people kind of look past. I've been an educator in the ARC for about, let's see, like 3 years now, for about 3 years. And I usually am very transparent. And I tell everybody, yeah, I have gold. Gold is a huge, well, I don't know about huge, but it's a big portion of my portfolio. It's about 20% of my portfolio, right? Now that my original mentor, Mark Moss, and when I say mentor, I mean like I learned from him, right? I bought his courses. I bought every course that he had. I've met him a few times by going to his events. I never got one-on-one training with him, but I just soaked in all the knowledge that he gave. And when he taught uh, this in his courses, he talked about gold as a very important part of a portfolio. The reason for that is because when everything is uncertain and the whole world is melting and we're going through another crazy collapse, a crazy recession, nukes are being talked about, and war is being thrown around. Usually gold does very good in that environment, and it's been doing very well because right now a lot of people are losing faith, confidence, and trust in the US dollar and currency as a whole, right? If you look at what China has been doing in the last 10 years, they've been selling off their dollars and buying more gold. Russia has been doing the same, right? And you saw what the US did to Russia. The US froze Russia's dollar denominated assets, right? So I bet Russia was really happy that they've dumped a lot of that to buy gold, because nobody, well, I'm not going to say nobody can take your gold away from you, but it's something that's held up for 5,000 years, right? It stood the test of time longer than anything, any asset has or store of value has ever, right? Gold is just universally agreed upon money. If the internet turns off tomorrow, I know that there is some place in this world that I have a nice chunk of my net worth in physical gold, so that if this dawn comes upon us where we're bartering again, right? And my family is starving, and we need a couple of cows, or we need vegetables, fruits, I can barter. I can do it with the physical thing, right? So I've personally invested in it physically. But there are options inside of DeFi, inside of decentralized finance, where you can buy tokenized gold, right? And it's an asset called PAXG. It's fully backed by gold. You can redeem PAXG for the underlying gold. If you have like $200,000 worth, you have to meet a certain minimum, but it'll be delivered to you. But it's really cool because it tracks the price of gold. Okay. And it has low correlation to risk assets. So usually when tech and innovation and crazy bull markets are happening, gold's not going to be doing much. It might actually go down. It might go sideways. But the idea is it always retains its value, right? Because then when the next reset comes and we have another crash, we have another thing happen, then your gold can kind of start rallying and holding your portfolio up. That's what happened this year, right? I think, we'll see it right here. Gold emerges as the top performing asset in 2025, beating Bitcoin and stocks. This was an article that came out in like February, March, April, when the whole stock market was crashing, when all of crypto was crashing. And gold, as you could see from 2025, right? This is 2025, has been going nothing but up, right? It's been completely parabolic. And I personally bought my chunk of gold like way back in May of 2020. And you can see I bought the gold. It did okay, but it was like sideways for quite some time, right? And it didn't start rallying until about 2024. Okay. So what we've seen, and if you guys look at the live that I did last week, we broke down why altcoins have been depressed, right? Why it's really been a Bitcoin only bull market. And I, as a very involved crypto investor, I had a lot of altcoins that didn't do so good for me, right? I had some alts that did well, and I had some alts that didn't do so well, right? But while I had a part of my portfolio that was losing or just going sideways, chopping around, I had another part of my portfolio that was going up in value, and that was gold. Okay. And I will continue to buy gold. I wish I bought more gold at the peak of the market in 2021. I had this idea I was going to do it. I was like, yeah, I want like at least $100,000 worth of gold. But I didn't do it because I had too much greed, right? And I gave a lot of my net worth back to the market. But on round 2, 3, and 4 and 5, I know what I'm doing. Like my goals are, I want to buy a house, I want to get more gold, I want to get more Bitcoin, and I just want to keep taking my profit into more stable things that have stood the test of time, right? Now, here's like an example of a place where you can buy gold. It's called AP Mex. Right, you can see this is when I first initially made my gold acquisition. I bought gold. It only costed me $23,000, and today's value it's almost doubled. It's almost doubled in value. Right now, I have a little bit of silver in there, which you can see has, well, that's cool. It's doubled in value. I have some platinum, not anything crazy. But I really like this exchange to buy physical gold. And anytime you're going to buy physical gold, you're always going to pay a premium on it because it's the physical thing. If you want to buy it for the spot price, you could do that inside of DeFi with something called PaxG. And I've held that before, but I personally have a lot of physical gold, so I don't invest in it in my stock portfolio. Well, actually, in my stock portfolio, I hold some, gold miners and other ETFs, but a very small portion because I have this already allocated. And also, I found this really cool company. It's called Monet. I found it way back then when I was doing all sorts of research, and it's a jewelry company that you can invest and buy jewelry that's 24 karat gold, and they sell it to you at a premium. It's about 40%. So it's not like buying the jewelry is immediately you making an investment, because you're paying this huge premium because it's jewelry. But what's really cool is they kind of set up a portfolio for you, and you could see how the value of all your jewelry has grown, right? And you could see, like, I decided to do it this way as opposed to like some sort of, Tiffany and Co. and other stupid jewelry retailers. Like, this is the only place that I buy jewelry on, right? Because I like the 24 karat stuff. It's a myth that it's not good for jewelry, and it's an investment, right? I've gifted this to a lot of people. I gifted this pendant to one of my best friends, and it's really cool because from the time that I gifted it to him, it's already gone up in value by 70%, right? Even things that you consume, like jewelry and wasting your money on things you probably don't need, you could still do it in a way where it's like kind of an investment, right? Like this is. My mom has some jewelry, my aunt has some jewelry, my friends have some jewelry, and I made sure to kind of bless them up with this 24 karat investment jewelry, and they can see it in their portfolio as well. It's super cool. But putting it all together, a smart portfolio is going to blend all four of these quadrants based on your goals and your risk tolerance. Okay. Now, I personally have like the majority of my portfolio in the growth section. I have a very small amount in the income section. I have a fairly small amount in the cash section just because I'm playing my cards in a way where I think this market's going to go up a little higher, and then I'll build my cash position through take profit. And I have a pretty nice apocalypse portfolio, right? But this is where, and I think we're going to share a worksheet in the description that I made that is just very, basic and simple, but it's going to ask you questions like, are you closer to retirement or are you further from retirement? If you're closer to retirement, you might want to focus on your income and your cash positions, right? But if you're further from retirement, you might want to focus on your growth more than your income, right? A lot of young people, they're like, yeah, I want passive income. I want to make passive income. I want to not work. I want to just sit back and collect my dividends. But a lot of people, they really sleep on the fact that you can actually go a much longer way if you invest into growth, let that stat grow, and then by the time you reach certain milestones, then start focusing on your income position, right? Or if you're already in retirement and you have a nice portfolio, right? Maybe you just focus on the income. Maybe you're not here to grow your investments as much, right? Or if you're a very, let's call it, skeptical person, right? and you think the entire world is going to collapse, and you want something in your portfolio that does well if the collapse of the world comes, as blatantly as I'm saying it, you want an apocalypse portfolio. This is like your long-term hedge, right? So like the beginning of this year, the entire crypto market was crashing. I didn't expect that. The stock market was crashing. And I had this gold in my portfolio that was actually going up in value by a very rapid rate. So it allowed me, when I visited home, to take some of that gold, I sold it, and I used some of that to buy crypto like Bitcoin, Ethereum, and I did it through some other vehicles called a vault. But what's cool is I got to enjoy the appreciation, and then I got to invest it in a place where it can then grow like crypto, right? And you want to just build these quadrants with intention. You want to align it with your goals, and you want to design your portfolio to grow, but survive, right? If you go way too deep in the risk curve on the growth stuff, you might lose it all, right? So you want to do it in a very strategic way, and that's why education is important. That's why our mission at the ARC my mission as a coach is to teach people how to do this stuff the right way, how to set up the portfolio in the right way. Anybody who works one-on-one with me, which I don't do that as much anymore, but anybody who works one-on-one with me, this is the type of stuff I love to go over, you know? Um, and yeah, and something I'm focused on more in the short term currently is I am exploring some really juicy income opportunities. I haven't had tons of time in the last few months to just dive into all sorts of different things, but I definitely have some really good stuff coming this Saturday for anybody who's going to be at Saturday school. We're gonna cover some good stuff and hopefully start creating a little more passive income. And like I said, right, like certain quadrants can kind of converge. Oh man, we're already almost 10 minutes over. But let me just finish with this point, right? Like the cool thing about DeFi is I can do all of these things in DeFi if I really want, right? And a lot of them can converge, right? Like my cash position can earn me income, right? My growth portfolio, a portion of those growth assets can be in a liquidity pool that then earns me income and can grow, right? My Bitcoin doesn't have to just sit in my wallet and collect dust. I can lend it out. My XRP doesn't have to just sit in my wallet and collect dust. I can go and lend it and earn, whatever, 2, 1, 3%, but it's still better than nothing. My Ethereum, I just saw a play today. I can make 40% on it. Now, usually these big APRs, they go down once a lot of people have caught on. But I was like, whoa, 40% on my Ethereum. That's pretty awesome. But yeah, I hope you guys enjoyed this this live. I see. Oh, the whole thing is. Yeah, I hope you guys enjoyed this live. Check the description for a worksheet I made. Check our website if you want to learn more about this community and how you can get involved in taking your finances to the next level. Okay. Our CEO is out of town, so currently I'm doing a lot of the classes that we're doing throughout the week, and I'm pretty excited for the Saturday. Next week, we're going to talk about some new stuff. Just yesterday, I talked about stocks and some stocks that I'm looking at that we can buy in DeFi and some opportunities, take profits, all of that. But yeah, I hope you guys enjoyed this value that we have, this alpha, as Jay is calling it. And yeah, and I'll catch you on the next one. So next week's live is going to be on Wednesday because I have to travel back home on Thursday, so I won't be available. But next Wednesday we're gonna I don't know what I'm gonna talk about. Maybe my story, maybe some more alpha. But you're just gonna have to stay tuned, okay? But yeah, I hope you guys enjoyed. Enjoy the rest of your week, and for any of our students that are on here, I'll see you in Saturday school. Come ready to learn and workshop because we're going to be setting up some of these plays, some of the ones that I kind of sneak peeked even on this live. But yeah, guys, Enjoy the rest of your day, your week, and keep keep pursuing abundance. Okay, thank you.